Flex dropping 1.1 billion on EP² is exactly the unsexy grid power play I live for.
Unsexy? Nate, engineered power systems are basically AI infrastructure in a trench coat, but closing in fiscal 2027, that is an eternity.
It is a completely normal integration timeline.
Please, by then, Mundys might actually finish their slow-motion takeover of Getlink.
Creeping up to a 19% stake is an art form. Speaking of slow moves, we need to talk about Unilever dropping its ice cream empire. The rundown. So, Unilever is officially out of the Indian ice cream game. Magnum Netherlands just scooped up, pun absolutely intended, a 61.9% majority stake in Kwality Walls, India.
Please tell me you didn't write that pun down beforehand.
I did. I'm not ashamed. But seriously, this is a massive changing of the guard. Unilever is officially dropping its promoter classification. End of an era for an iconic brand.
It's a clean exit. I'm actually more interested in the infrastructure plays this week. Mundys is playing a very quiet, very patient game of accumulation with Getlink.
Oh, the creeping acquisition. I love this.
Right? They're starting with just a 3.5% upfront purchase, but if you read the fine print, they're setting up to acquire up to a 9.5% stake.
Which leaves the door wide open for them to nearly double their total holding to 19%. Classic banker move. You don't kick the door down. You just slowly turn the handle until you're sitting in the living room.
Exactly. It avoids spooking the market and keeps the premium low. That's how you deploy capital efficiently.
Speaking of deploying capital, Count is buying financial advice firm Oracle Group for $72.2 million.
A highly calculated scale play. They instantly add 22 advisors to their employed channel. And honestly, a 7.2 times earnings multiple is incredibly reasonable for that kind of instant footprint.
Hold on, no it isn't. Did you see what that multiple is based on?
Forward earnings.
Forecast fiscal 2026 EBITA. Maya, we're years away from that. Paying a multiple based on what a wealth manager magically promises to earn 2 years from now? That isn't a reasonable multiple. That's a leap of faith.
Oh, come on. It's a completely standard forward pricing structure for financial services. You're just overly cynical about growth projections.
I'm cynical about paying cash today for imaginary numbers tomorrow. Look at HG. They just did a totally clean, full exit selling Geomatic to Axel. No messy 2-year forecasts needed.
Fine. But software is a different game entirely. Look at Allshares acquiring Amalia in France. They bought a highly sophisticated rules-based engine for sales commissions. You pay a premium for the tech, not just the current headcount.
European tech consolidation is definitely heating up.
It is, but we need to shift gears and talk about the heavy hardware. Flex just dropped a massive $1.1 billion on EP², and we really need to tear apart this regulatory timeline.
A first quarter fiscal 2027 close. I have so many questions about what happens between now and then. The big one. $1.1 billion for electrical power control systems. If you told me 10 years ago that switchgear and power panels would be the sexiest M&A sector, I would have laughed you out of my office.
It is not sexy, Nate. It is plumbing, high voltage, engineered to order plumbing. But sure, Flex just wrote a very real, very massive check to buy EP².
It is absolutely sexy right now. Look at the macro picture. Data centers, AI, grid modernization. We are running out of power capacity globally. Flex buying a pure play provider here is a classic banker move to lock up a critical supply chain. I actually love the strategic fit.
I am not arguing the sector demand. Obviously, everyone needs power control infrastructure. What I am staring at is the closing timeline. First quarter of fiscal 2027.
So, it takes time to integrate complex industrial assets.
Nate, that is almost 2 years from now. In the hardware and tech cycle, that is a century. Who signs a definitive agreement for $1 billion buyout to close in 2027?
It is like ordering a custom couch. You want the really good stuff. You wait for it to be built.
Are you seriously comparing $1 billion corporate acquisition to waiting on a velvet sectional from West Elm?
Yes, I am. Because EP² is engineered to order. It is a highly specialized custom build business. You cannot just flip a switch and absorb that into a global supply chain.
That is exactly my point. Engineered to order means bespoke. Bespoke means it does not scale easily. Flex is a massive electronics manufacturing services giant. They thrive on volume, speed, and standardization. Buying a bespoke power shop and taking 2 years just to close the transaction, the regulatory filings on this are going to be a fascinating read.
You always assume the worst.
I assume risk. I guarantee there are some heavy contingencies buried in the purchase agreement. You do not leave $1 billion hanging in the wind for 2 years without an ironclad escape hatch.
I see it as Flex planting a massive flag. They are telling the market they own the power infrastructure layer now. If you are building a hyperscale data center, Flex wants to be the only number you call. They are willing to wait for the regulatory dust to settle to get that market position.
Assuming the deal actually closes in 2027, a lot can happen to the AI hype cycle and data center demand in 24 months.
Spoken like a true skeptic, I will take that bet. I think the multiple they are paying will look cheap in hindsight.
We will put a pin in it until the proxy drops. I want to see the break fee on a timeline that long. I will be watching the integration timeline leading up to Q1 2027 very closely.
Fair enough. But speaking of weirdly long, drawn-out plays, we need to talk about what Mundys is doing over in Europe right now.
You mean the creeping takeover strategy with Getlink?
Exactly. They just snapped up a 3.5% upfront stake, but the gossip is they are quietly setting up to nearly double their total holding to 19%. Voices. Reading this analyst note on the Count buyout of Oracle Group, they're calling it a, quote, calculated scale play, unquote, $72.2 million.
Right, for 22 advisors.
Exactly. The analysts are obsessed with the multiple. 7.2 times forecast fiscal 26 earnings. They say it's perfectly reasonable.
I hate the phrase forecast earnings. It's just guessing with math. But sure, let's pretend the 7.2 multiple holds up. Over $3 million per advisor. That's a hefty premium just for wealth management headcount.
Oh, come on, you're looking at it like a tech recruiter. It's an AUM grab. Oracle Group has the established client book. Count is just buying the pipeline. Classic roll-up strategy.
A roll-up strategy that assumes zero client attrition when the name on the door changes, which literally never happens. I want to see the retention incentives in the footnotes.
Fair enough. But speaking of analyst jargon, did you see the coverage on All Shares buying Amelia?
Oh, please read it.
They say it integrates a, quote, highly sophisticated rules-based engine for performance management.
A rules-based engine. So, if-then statements. They bought a really expensive calculator for sales commissions.
You're so cynical today. Amelia is actually a solid platform. It automates complex equity payouts.
I'm sure it's great. I just love how we dress up software acquisitions. It's a commission tracker, Nate.
Let's talk about a strategy you can't dress up. Mundys quietly eating up Getlink shares.
The creeping acquisition, 3.5% upfront, but they left the door wide open to grab up to 19% total.
It's the corporate equivalent of hovering near the buffet, just taking one meatball but keeping eye contact with the whole tray.
I want to look at the regulatory filings on that one tomorrow. Actually, speaking of filings we need to watch, we should probably talk about Flex dropping $1.1 billion on EP². Spill the tea, si poi fallen po details.
So Unilever is finally washing its hands of Kwality Walls India.
Handing the keys over to Magnum Netherlands, a 61.9% majority stake. They're officially dropping the promoter classification entirely.
Which is just corporate speak for saying they're totally over the ice cream headache in that market.
Or they just looked at the margins and won it out. But honestly, the real drama this week is over in Europe. Mundys is playing the quietest game of accumulation with Getlink right now.
Oh, I love a good creeping acquisition. It's so beautifully passive-aggressive.
Exactly. They're starting with just a 3.5% upfront stake. But if you read the fine print, they're leaving the door wide open to nearly double their total holding to 19%.
See, this is why I miss banking. The absolute audacity to buy 3%. Act like you're just a friendly tourist taking photos of the channel while your legal team is quietly drawing up plans to basically own the boardroom.
I don't buy that they're just a tourist, Nate. Look at the structure. The headline press release says they're acquiring up to a 9.5% stake, but the runway goes all the way to 19. It's a textbook shadow takeover.
Wait, you actually think they're going for full control? Oh, come on. No way. Getlink is way too entrenched. I was saying Mundys is just strategically parking capital.
Nobody parks capital with an option to double their holding just for fun. They want leverage.
I completely disagree. I think it's a pure scale play. It's exactly like what Count is doing with Oracle Group down in Australia, just with more zeros.
You're comparing a European infrastructure giant to a wealth management buyout.
Hear me out. Count is paying $72.2 million to grab 22 advisors. They paid a totally reasonable 7.2 multiple on forecast fiscal 2026 earnings. It's calculated. Mundys is just doing the billionaire version of a calculated scale play.
Buying financial advisors in Australia is slightly different than tunneling into Getlink.
An acquisition is an acquisition, Maya. But speaking of massive power plays, we need to look at what Flex is doing.
Right, $1.1 billion for EP². The regulatory filings on that integration timeline are going to be my bedtime reading tonight. Tomorrow's radar. I'm refreshing the regulatory filings on this Flex deal tomorrow morning. $1.1 billion for EP² is massive, but closing in Q1 of fiscal 2027, that's an absolute lifetime in manufacturing.
It really is. But honestly, I'm looking right past Flex. You need to be watching European tech consolidation. Accel buying out Geomatic is just the starter pistol.
Oh, come on. European tech is moving like molasses right now. It's totally fragmented.
Not in the middle market. You've got Accel plus Bending Spoons grabbing Tractive. The private equity guys are getting restless over there.
Restless is one word for it. Creeping is another. Are you tracking Mundys quietly gobbling up Getlink shares?
Classic infrastructure play. Slowly boil the frog. They start with a 3.5% stake, but left the door open to take 19.
Exactly. But wait until you see what Unilever is doing with their ice cream division in India. Remind me to pull up that weird ownership structure right after this break.